If you're looking to obviously invest in any type of courses, which I'm going to say it like this, we don't say you have to buy any courses. Okay, so we don't want anybody to believe that in order to be successful within the Wealth Squad that you have to buy a course. Please know that there are going to be an unlimited amount of resources on YouTube. There are books that you can, read as well. Courses, whenever your providers make courses, it's because, for one, maybe you like that particular provider's trading style, or maybe you like how they teach, you know what I mean? And so that's the reason why we put together courses. So I don't want anyone to think that we're pushing courses, okay? If you like Ray's teaching style, Ray has a course. You like Key's teaching style, he has a course. If you like my teaching style, I have a course, okay? That's just being fair. Now we have this information in here. Also, if you're looking for example, if you're trying to figure out what brokerage you could use, number 18 literally shows you a list of commonly used brokerages if you're in the UK, or brokerages that we like to use within this particular community. Okay, so just come here to Market Facts and Resources, and it breaks down a lot of things that you may not have even known existed within this community, but please come here. I just recently updated the sector rotation, how to view the sector rotation, where to view it, and then also the small accounts watch list for anyone that's getting started. So I just updated those yesterday. So just come in here to see what's new, what's popping, what's going on. All right, so we have any hand raised? Day.
Hi guys. I went here yesterday and it said watch the options video. Is there any particular order they need to be watched in?
What are you talking about? From Market Facts and Resources?
Yeah, if you click on that, it says watch the options videos. And I went to the YouTube and there were like 79 videos. So I'm wondering, is there any particular order, or would you suggest an order? Or
my number one thing that I would advise you to do is try to figure out, I don't know, are you completely new?
no, not brand new, but
Okay,
still new.
so what I would recommend, if it's any particular topic that you may be struggling with, maybe start there. You know what I mean? If it's anything that you're trying to hone in on, start there.
Okay.
If you're new, try to look for something that's like an intro to options, or look for them to be dated like chronologically, because what we tried to do is try to open the door to beginner stuff in the beginning and then push the needle forward, like keep the ball rolling as we go along. So
Okay.
start there.
Okay.
Outside of that, like I said, you have other options as well, but if you're going to go based off of Wealth Squad University, just try to do the chronological order thing, or look for anything that you may be struggling with.
Okay. All right. Thank you so much, guys.
No problem.
All right, so that was the only question. Make sure if you have a question to raise your hand. If you don't raise your hand, I'm just gonna start.
So yeah, but then there's people that are that may not, want to raise their hand. I say that, Ray, because I've gotten messages from people who have certain disabilities that may not want to actually speak. So we want to be mindful of that as well.
I'm taking over.
Sure, you wanted to do that anyway, I'm sure.
Anywho, all right. Nobody has their hands raised. So we just gonna start breaking something down. Kind of bored. My mind's racing right now. All right, so one chart on one side is a visual aid for me. So like my inside colors are yellow, my outside colors are blue, but I might delete that chart. So make one right here, make one right here. And I'm gonna delete that one for right now. All right, so what I'm gonna do is just put up like a couple of sectors, right? XLP. All right, that one right there. XLE, which it doesn't do it perfectly because I have a widescreen monitor. So the chart is gonna be off a little bit. Matter of fact, I just do two. Yeah, because the wide monitor is gonna throw it all the way off. And I actually need to do it side by side instead. So XLE. All right. And essentially what I'm gonna show you is like the better way to look at, well, I wouldn't say the better because it depends on what way you're looking at it, but like the way that I particularly look at sectors, right? So whenever I'm going through my list or whatnot and I'm making it, because this is something I implemented like end of December going into January, is actually picking a stock that's in a moving sector as a more of a swing instead of picking a setup. You know what I'm saying? Like actually having context to it and where, you know, smart money is actually at, right? Instead of, because for me personally, it's hard for me to like my attention span when it comes to certain things. It's hard for me to like go through website after website after website, looking at those different, you know, sector rotation charts or looking at the highlighted areas of where it says that the seasonality is for certain sectors, and then realizing that this year is kind of like has so much going on that the sector what sector would normally be popping right now probably isn't. You know what I'm saying? Because we have the inflation, we have the Russian Ukraine crisis basically. So that's also going to affect which sector um smart money is actually in. All right. So whenever I'm starting the week, I'm going to look at, or starting the new month, I'm going to actually look at the sector. But to even start the year, I was looking at the sector. So just to like give a full walkthrough of why I even picked Oxy at the beginning of the year was, well, I think it was like the second week of the year, was because XLE had a 2-1, right? So I'm going to change XLP to Oxy real quick so you can see the side by side, right? So Oxy on the year is also a 2-1-2 reversal, right? Along with a few other, and I don't want to delete all these lines off my chart, so hopefully y'all can see it clearly. But it has a 2-1, so both of them had a 2-1, except for it took Oxy a little bit longer to actually activate. So it was like lagging behind like a few of the other ones like CVX and XOM. All right. So that was the reason why Oxy was on my chart. So just by seeing the actually yearly chart, right? And I know for some people that just day trade, going that high isn't always necessary, but at the same time, it could also make your day trades more powerful as well. Just in case you end up wanting to swing into the next day, you can see if you're swinging wisely with something that actually has a trend in that overall sector instead of just swinging something to swing. Like for the people that's probably been trying to catch the bottom of Facebook, that hasn't necessarily been the smartest unless you're actually like accumulating shares. But as far as like swinging options for trading and not investing, it's not the best because Facebook is in, I think, XLC. Let me go here to the analyze tab. I think it's XLC. And XLC has been down. Yeah, because Facebook is number one at XLC. All right. So what I'm doing is I'm looking at the year. Are we directional on the year? Why is that important? That's important because if we're, so just to break it down, put it in the simplest terms, if we're above last year's high, so if price is now higher than price ever was last year, that's very bullish. Same thing if price is lower right now or was at one point this year lower than last year's price ever was, that's very bearish. So if I'm looking at something, I'm like, wow, we're higher than we ever were last year, as well as it looks like we might be at the bottom and we're starting to go to the top. Why wouldn't I want to participate in that, right? Especially if that whole sector, the charts, at least in the top holdings, are looking similar. Why wouldn't I go ahead and participate in that? Because one, I don't have to worry about, dang, we're at all-time highs. How far will it keep going? I don't know where to put my price target. I got to, watch and see what the analysts are saying. Are they constantly raising the price target? Or are they just holding that where it's at? That's what you run into when you get into something at all-time highs. That's why you see more so of Oxy on my list than CVX, because CVX Chevron is constantly making all-time highs. And it's like that for me it's uncomfortable. I don't know how far it's going to go before it pull out. Meanwhile, obviously, I could just go back through previous price history. And I could be like, all right, this is going here. And I can feel more comfortable. Not that you can't trade CVX and keep holding it, because it's also an XLE. And I think it's the number 2 holding in XLE. Yeah, it's the number 2 holding in XLE, right? So it's not that it can't keep going, but I'd rather catch something going through a previous range, because even XLE is coming through a previous range. So it's going to be easier for me and my personal trading psychology to keep holding Oxy or to keep participating in it. Because sometimes when something is at an all-time high and it pulls back, you'd be like, dang, I knew I shouldn't have traded that, exhaustion risk or something like that, right? So that's why I personally prefer Oxy in, that sector, to look at Oxy and like SLB. But this is how I'm choosing my trades now. I'm actually participating in the sectors that the smart money is participating in. And it's easier for me to see this stuff now than before, because I had to read like so many different articles. And that's not my forte. For some people, that might be their forte. But for me, it's easier just to look at the chart, because if anything, if news come, it's going to reflect in the price action anyway, because good news doesn't always move the stock for the positive. Sometimes it moves it for the negative. Does everybody understand so far what I'm saying? And if I need to go back over it, I'll go back over some stuff.
Before you do that, Ray, for the person, Jermaine, if you could tell me what you mean by what you asked me about the strike prices. Is a few people asking questions in the chat, so I'm trying to make sure I have an understanding of what he's saying.
Did he say something yet? Or her? And for the person who asked how to put the strat numbers on the chart and MWQ, I just posted the video for that. Hey, Dave, what's your question?
I was wondering, do you go over this information on the watch list and chill with the different sectors?
Do I go through it? Not every time. I don't go through every sector, but I would tell you which stock is in which sector. So like,
Okay, no, I'm saying to how you doing this now with the different sectors. Do you break that down in a watch list and chill?
you talking about in the course?
Yes.
Yes.
Okay. Alrighty. Thank you.
All right.
Pick those out.
Do you go through sector ETFs?
Essentially, what you want to do whenever you're looking at the various sectors, you want to see who's leading. And then you can actually go into under analyze, the analyze tab in Thinkorswim. And then you can go to fundamentals, and that's a place that you can actually go to view what stocks are within that sector, and it gives you a bunch of information. So you can do that just to figure out, number one, what stock is leading and what ETF is leading rather, and what stocks are held within that ETF.
Janae, you can ask your question. I think that's how you say it. I'm sorry if I butchered.
No, that's right. Hi, everyone. I saw you put a sorry, I can't even say it. A watch list and chill. I didn't get to watch it yet. So hopefully, if it's in there, just can you tell me? But my question is, so for me, I feel like sometimes I have analysis paralysis or whatever. So I've been studying all of that. But sometimes Mondays and Fridays, I'm like afraid to trade, in the sense that I get with the strat, we're not choosing directions and we're following price action. But even, I think I saw you put Oxy on the list again, right?
Yes, I did.
Okay. So like even something like that, how would you, like, in terms of having a good mindset, when you see a stock has already run up, even though I see based on the monthly, there's still a lot of room. Like when you see a stock go up like $8 in one day, how do you not just in your head say like, oh, I'm gonna leave that alone? Because even though I get it's not exhaustion risk, I feel like I've become a superstitious trader, where if I make money or if I see something like run up, I'm just afraid to touch it and give back the money. So I'm just wondering how do you even conceptualize putting Oxy back on your list for Monday?
All right, so it's two things. All right. So one, I used to be the same way, right? And the reason why I was the same way is because I wasn't looking at sectors the way I was supposed to. I kind of didn't fully understand that concept of the way Rob was putting it. All right. And the reason why it's back on the list is because when I'm in an April contract for it. So I'm in the 60 call for April 14th for Oxy. So it's back on there just because when I'm still swinging a position in it. But I will use the weekly contract to like day trade it. All right. Cause I'll probably let the weekly go unless I'm up like 100% or something like that. I'll go ahead and swing that. But it's easy to continue to trade something if it's leading in that sector, right? Well, I wouldn't say if it's leading in that sector. If it's in a sector that is continuing to show strength and smart money is continuing to invest in it. Plus, there's other catalysts that has come out that I think will make other people, more comfortable. Like Oxy has a buyback, right? So, and Thinkorswim, if you made it so that when you're in the flexible grid, you have the panel beside it, you can actually click on news and you'll see that one, it just got some more news, but one, Warren Buffett, Berkshire Hathaway boost stake in this oil company. So Warren Buffett has been adding to Oxy as well as, so they have the buyback. Warren Buffett has been adding to it. Plus you have the potential of Russia imports basically being um, banned or whatnot. So that will make oil go even higher. So that's why I can go ahead and comfortably do it. But even without knowing that information and just looking at the chart, I'm still comfortable with it. It might pull back that day. I might end up getting stopped out. Yeah, but eventually it's going to come back up some. So like, for instance, if I go down to the daily chart, and then I will re-unmute you, JG, let's call you JG, right? Right here, somebody got in, they probably got stopped out on this day once it gapped down again, right? But then you had the opportunity to just take it when it went back up. You see what I'm saying? So that's how, like, let's say Monday it gaps up because it's looking like it's probably going to gap up. It closed at 56.15. Looks like after hours they moved the price up to 57. So even if it gaps up to 57 and does the same thing it did, was this Wednesday, all right, cool. Whenever it comes back up, then I just retake it again. You know what I mean? That's why I still mark the put entries just in case it doesn't continue to go up. I could just, take the put entries. And if my contract that's far out is still looking good and it's still above 30%, then I just continue to hold that. And when I get the reversal back to the upside, that I can add to that position if I want to. Now let me unmute you to make sure.
Before you do, I'm glad, really quickly, Ray, before you do that, I'm glad you mentioned where they could pull up that information because that's very essential. A lot of people forget that we have to look at catalysts as well to help us to see what's going on with our charts too. But for people who may not use Thinkorswim, if you're not using Thinkorswim, there's another avenue that you can use to see news for that individual ticker. All you have to do is go to finviz.com. Ray, do you still have Finviz?
Mm-mm.
No, okay. So I have Finviz. I can show y'all once Ray is done, but if you go to finviz.com, you literally can type in the ticker, right? You can scroll to the bottom and any news that has come out about that particular stock, you can literally go there. Scroll to the bottom, and it's going to show you everything that's happened. It's going to give you like so much information. So if you're ever questioning, well, what's going on with this stock, you can literally go there, type in the ticker and see what's going on. The person who just typed in the chat said you can go to Twitter as well. You can put the $, then the ticker, and then go to latest in Twitter, and it'll show you what's being talked about with that particular ticker as well. So you guys have to use your resources. That'll help you to, know what's going on with a particular stock and can help you to stay in a trade longer. Or it can also alert you when to get out too.
Okay. Thanks, Ray and Kay. Okay, I think I understood what you just said. So one thing based on what you said, with the whole thing of like conviction on your trades. So based on what you said about Oxy, would you say that I know you follow price action, but
Right.
based on everything, is your conviction long for your swing trades? So like for the monthly, but then when it comes to day trades, that's when you just follow the price action. So you do have a conviction for like a long-term position, but on a day-to-day you're just
So what I'm doing is it's not necessarily like conviction, because if price end up reversing tomorrow and pulls back a lot, then I just cut it. You see what I'm saying? So I'm not gonna just hold it to hold it. Like my rule for me is like I really prefer to swing things that are at least up 30%, because if it gaps down, I won't be hurt as bad. So like for instance, one reason why I have the 30% rule is because like from here to here, Oxy gap down a lot, right? So if I had like, a 1 week further out and I was up 30%, I'm probably not down as bad if I'm down at all. Versus if I swing and I'm at break even because I just bought it at, right when market was closing, I might be down 30, 40%. You see what I'm saying? But see, you said conviction, but that's how I actually do it. So like, trying to make sure I remember your question correctly. So you said that
I just want to make sure basically because with the whole like not having an ego and going and following price action, I feel like it's a little bit confusing because based on Oxy, it seems like you should go long. But
mhm,
then on the day, if there is like a pump and dump where people are taking profit,
right.
you would either get cut out your position and have to wait. And I feel like because the bias is long
Mhm.
for like the monthly or the weekly, sometimes I don't even understand the point of going for that put, especially if it's like based on your chart, it might just only pull back very little, but you still might get cut out of your trade. So
It could also just be used to, like, let's say you have the further out expiration, right? On that day, it might go puts. Well, at least you can, get some money off the put aspect, right? Because that's what some people do when they, like, let's say buy shares. They might play puts just to get some extra profit, but they still hold on to their shares. You see what I'm saying? So it's just a way to make more money and not really necessarily have to go and trade other things just because that stock might not be moving, because some people only trade the same 10. So if even though they might have a 3 month out, 6 month out contract or something like that, they still take advantage of the put opportunities. Because for some things, like for instance, I'm just gonna say for sometimes what would happen is you might think that's just a slight pullback, but in the end it just keeps dumping, right? So at least you already have a put position just in case maybe instead of a 1 day pullback, maybe it pulls back for the next week or two. You see what I'm saying? So at least you can go ahead and capitalize off the put aspect. So it's just, and that's why you don't have an ego with it. That way you can play both sides and make money. Because some people in the trading world only do calls, they never do puts. So they never get to, let's say they hold because they think it's just a slight pullback. They never get to take advantage of having a put, and then they could just cut their call position and then just let the put position roll out if they end up going back to break even on the call or even end up down on it. Does that make sense to you?
it does. And one really, really last quick question, if you can answer.
Mhm.
When you're making your watch list for the week, especially since you use the strat, do you try to like choose like two potential call options and two potential put options just so you know which
No.
might be better to play based on like the SPY or futures? I heard you say no. But I
No.
guess I'm just trying to figure out how to not be like superstitious with trades. Like even with the analysis and the strat, I'm trying to figure out how to go about objectively being prepared for both sides of the market.
The strat prepares you for both sides. So keep in mind when you're marking out your levels, when using the strat, you're marking, okay, if it breaks in this direction, because you're trading essentially price action. So if it breaks in one direction, you're prepared for that. If it breaks in the other direction, you're prepared for that. So we don't actively go through and say, okay, we're looking for two calls and then two puts. No, that's not what we're doing, because what if the puts that we choose are trading with the market sentiment and the market sentiment goes calls? You know what I'm saying? So we're not doing that. We're legitimately just marking out what looks good on the chart. We're marking the high and the low, and we're looking at sectors to see where the strength is, and we're taking a position that way. So you can't really have directional bias. And the good thing about the strat is that it kind of removes that directional bias.
But when a stock is not following market sentiment,
Mhm.
how do you not let that affect how you're viewing what's going on in a particular stock, even if it, so like,
How-
let's say like the strat,
Mhm.
and then the trigger pulls for the calls,
Mhm.
but then the market sentiment, like you're on Finviz, everything is red.
Mhm.
Like, how do you not just feel like, fuck, like, like this is feeling a little bit sketchy? Like,
Well, this is the thing. So kind of like what Ray is showing right now, what the safe thing to do would be to have something like the S&P 500, have your flex grid up, right? Have the S&P 500 up, whatever ticker you chose for that day, have that up, have them side by side. That's going to help you to see whether, and make sure, this is an important thing too, because somebody did this wrong. Make sure that you're viewing them on the same time frames. Look at the chart patterns, see if those chart patterns are mirroring. If they're mirroring, well, if SPY starts to take off, then that stock may start to take off. If SPY starts to tank, then that stock might start to tank. But if you put them side by side and you see that this stock is moving independent of SPY, then that means it's doing the opposite of what the S&P 500 is doing. But what I'm saying is, either way, you're taking your trade in the direction that price action breaks out in. You're looking at the S&P 500 as a guide to say, is it mirroring the S&P or is it trading independent of the S&P 500?
okay, that's really helpful. Thank you both.
No problem.
Definitely. And then also for me personally, I kind of like exclude all that noise. So that's why like I think somebody asked me in the new member welcome Zoom like what all apps they should download. I personally I don't look at that stuff. I don't care what FinTwit says. I
Yeah.
don't care what people on Twitter say. I'm just gonna look at the charts and I'm gonna stick to it. Now, what I might do sometimes, if the stock all of a sudden start dropping, I might, and that sector is continuing to go up, it might be some personal news that came out on that stock. So I'll look at that. But other than that, I'm just looking at the charts because it doesn't, to me, it doesn't matter how much conviction another trader has on Twitter or FinTwitter or what their analyst says on tip ranks. If I don't believe in it, I'm still gonna get shook out. Or they could say, "Well, I'm bearish on this," and then it continues to run because people can be wrong. So I don't really like all that extra noise because I like to analyze things thoroughly anyway, and that's just gonna cause me to have analysis paralysis. Whether I just rather bet on myself at this point.
I agree with Ray with that one, 100%. And kind of like the whole tip ranks thing, I'm not saying that it's not a good website to look at. I mean, it's good to see what other analysts are saying, but by the same token, it's like, trust yourself because they could be wrong. You know, when you look at FinTwits and all of these other people's stock twits, these people arguing in the comment section, everybody believes that they're right. You know what I mean? It's like going to a fight. You're bidding on who you think is going to win. It's the same thing. So trust yourself before you trust anybody else, which is important for you to know how to chart because you may not even agree with us if we put something out. You may think like, I don't agree with this stock. You say it's going to go this direction. I don't believe that. Trust yourself. Okay. I told you guys just pay for a free version. TradingView, I pay for Finviz. Yes, I pay for it. Actually. I don't use stock charts, but TradingView and Finviz I pay for. Ray, you still use TradingView?
Yeah.
Anything? Yeah.
All right. Robins. I'm probably saying your name wrong, but you can ask your question. I just asked you on mute.
A question for Kate. I know you be trading SPY a lot, and I was trying to see, do you mainly just trade SPY only? Because I used to trade a lot of stuff, but now I'm only focusing on like 5 stocks, and I see like I'm doing way better with focusing on those 5 because I know exactly what those 5 are going to do. And I was just trying to get your option, your opinion on that.
Well, I absolutely love that you're focusing on 5 stocks. I'm not even going to lie to you. When you and do I primarily trade the S&P 500? I trade it a lot, but that's not the only thing that I trade. But I will say this: learning a stock intimately, knowing when it's up, when it's down, seasonality, when, you know what I mean, when it may tank, the best time of the year that it performs, how it does quarterly. These things give you a home court advantage, right? So when you know a stock so well that you can read the candles very easily, it's a great way to make money. If I chose to not trade anything and I chose to trade the S&P 500 alone, I would make a lot of money simply because I know how the S&P 500 moves, and it's so easy to read. So what you're doing is great. Find you 5 to 10 companies. And the reason why I say 5 to 10 is because what if some of those companies just aren't moving that day? Find some that's moving with a great amount of volume on any given day that has a really good average true range, and study the heck out of those charts and let those be your bread makers. Ray, what was your stock that you liked that I told you I wasn't touching because I knew you loved it? I forget, was it Crowd or was it?
I don't remember.
It
'Cause
was
it probably
something.
fell out of grace.
It was something. At one point in time, I remember Ray had a stock and I said, and he was killing it with this particular stock too. And I was like, it came up on my list of something that looked good for me, but I wasn't going to call it out in the community because I knew that that was Ray's baby. You know what I'm saying? So we have our stocks that we look at all the time. You know, Nvidia is another one that I absolutely love. It's extremely volatile, but I love it. Crapple. Apple hasn't been the same since the stock split.
Oh, Robin, did that fully answer your question? Because I see your hand still up. Or did we cut you off by accident? Because the thing will remute you by accident.
Oh no, nah, you answered my question. I had unmuted when Kay started talking.
Okay, I bet. But I was making sure.
Oh, Misha, you're right. Misha, you're right. It was. I'm sorry, Robins. I thought he was done, but Misha, right. It was Crowd or Chewy. It was one of them. I think it was Chewy though. Someone asked something about Thinkorswim stop loss. I think I saw that. Setting a stop loss.
How to set it.
Yeah. Also, someone asked about, not here, but in the community, asked about how they can kind of stop from being shaken out so easily. You guys know that there is a such thing as a trailing stop, and some brokerages will allow you to put a percentage in, and some brokerage will make you put like a dollar amount. So for example, let's say a stock is running, and let's say you want to stay in, but you also don't want to give away your profit if it starts to reverse, like give away all your profit. So you can legitimately put a trailing stop if your brokerage allows it. And let's just say you put in there, if it reverses, I don't know, $20, take me out. You know what I mean? It's going to take you out as you're in profit if it's profitable. So that's something else you can do. I've never seen anything say pre-buffering before.
I got too much stuff open.
Yeah. It's cool.
All right. Well, it's still waiting for this. If it even works, I got a lot of applications open right now. Oh, let's see. AF89, you can ask your question.
How you doing? I wanted to know, y'all said y'all don't use stock charts no more?
I never used it personally.
We never used it. I never used it. It's a charting platform. So we use what is easier or what layout we like. And for me, I like TradingView. Ray still uses TradingView as well. So we're both using TradingView. It's kind of like having a bank. You know, we don't all use the same banks. We don't all use the same brokerages or charting platforms. We go for what is beneficial to us. So saying that means you don't have to cancel your stock charts if that's what you're using. If it works for you, you know, stick with it.
When And then, so as far as like setting a stop loss, one, there's like videos on YouTube to show you how to actually like set the stop loss. Cause all you would need to make sure is, let me write this down.
Thanks. I appreciate it, y'all. My bad.
Oh no,
Problem.
you good, bro. All you need is for like, let's say you do a stop limit, because the confusion comes on the stop limits and things of that nature. So like, let me pull up the notepad. So with the stop limit, there's two things that you have to do. You have to set the stop order, basically the stop limit. Well, no, it would be the stop, and then it's going to ask you the limit. All right. You need to make sure that the stop price is higher than the limit price. All right. So like, let's say for instance, you wanted to do, let's say the price of the contract is $1, right? And you wanted to do 30%. Well, your stop is going to have to be higher than that 30%. We know a 30% of 100 is $30, right? So your stop would have to be like 0.35. Reason being is because you need to put space between your stop and limit, because if the price dumps like crazy, price action might on that contract might jump past your stop. And that's why sometimes your stop isn't hit. But you have to put your stop at 0.35. So that's going to trigger your stop, and then it's going to sell your order at 0.30, right? So if you're doing a stop limit, your stop price needs to be higher than your limit price. Some people, what they're doing and what's messing them up is they're putting either them both the same. And sometimes, again, if price moves too fast, it's not going to be able to trigger your order that quick. Or they're putting their limit price higher than their stop price. But your stop price is actually what triggers the order. And then the brokerage sells your contract at the limit price. So again, the stop price needs to be higher than the limit price. I switched my screens. Y'all don't see?
We see your notepad. Is that what you're trying to show us?
Yeah.
Okay.
Somebody said switch your screens, right? So I was like, oh.
I wonder if they're trying to say go to the, like simulate it like you're actually doing, or they may have thought that you were simulating it like you were submitting an order to
Nah, I
include
wasn't.
stop and stop limit. Yeah.
And then hold on. Yes. All right. So one of the ways you could scale in, right? Just to do this real quick. Let's say you bought Oxy Friday, right? Kind of gapped above. Let's say you, no, I think this is the high day right here. All right, so we can get to the two people that raised their hand. Let's say you bought it at the high of day, right? Let's say you bought the 50 call. The way you could scale in is one, go to a lower time frame, right? Even though I don't really recommend scaling in during power hour the rush hour during a 0 day, if you got a 0 day contract, because you're probably going to get clapped or you're probably going to panic sell. Because somebody who probably bought another contract when this went too up and then it pulled back, they probably got scared, right? So I would only scale in on a pullback, right? Or TTO, or whatever you want to define it as. So let's say I bought some 50 calls down here, right? And I wanted to scale back in. Either I would have scaled in here once it reversed back to the upside, or scaled in here, right? So like, let's say instead of doing a 0 day, let's say you bought a March 18th contract, right? And it's running. When it pulls back like this would be the time to buy again, right? Or buy right here on this 3-2 continuation on the lower time frame, and then ride it back up. All right. So that's how you could scale in. It's better to scale in when it cools off versus on an actual continuation, just in case price does pull back. Because what if somebody scaled in right here and then price pulled back? And then because morning rush is basically over on this pullback, the IV of the contract went down, and then they have a 0 day. So now you've seen a big decrease in your contract price, and then all of a sudden you're negative because you scaled up. You know what I'm saying? So you have to take those things into consideration when you're scaling up into a contract, which is better to scale up into a further out expiration on a pullback.
Yeah.
Correct. So you can scale in based on price action, correct?
Yeah, you can scale in based on price action. If you're somebody who uses any other type of indicators, there's other things that you can do to scale in. So for example, let's just say you're in a stock that's running and it's running very far away from the EMA that it normally rides, right? What you can do is you can actually wait for it to pull back, because 9 times out of 10, we are going to come back to our EMAs and test our EMAs and potentially take off. So that's another way that you can scale in. You can also, if you're someone that uses pivot points or any types of levels, you can wait for it to retest a certain level and then get in there as well. So it's multiple ways that you can actually scale into a position. Does that help? But also when you're scaling into a winner, you may want to adjust your profit target, you know, because if you're averaging up, then, you know, you may want to adjust your profit target. No problem.
Let me see. Crit, well, no. Day, you can ask your question.
Okay, I wanted Kay, if she can go over the list of things to look for with the 5 to 10 stocks that you trade on a regular basis, a little slower, so I can jot that down.
Sure. All right. Let me see if I can. Ray, did you have anything else on this?
What aspect?
No, I'm saying, were you done showing anything on this?
Oh yeah, you can go ahead.
Okay, all right. A list of things that I look for. Let me just pull up my chart here. 1 second. All right, so it just depends on obviously what I am trading. Okay, so let me just start there. Normally when I'm looking at, and can you all see my chart? Put a 5 in the chat if you can. All right, cool. Just need a few people. All right, let me minimize this again. Come on, baby. All right, so normally whenever I'm looking at my watch list, there's a bunch of different things that I do, right? So I may scan, you know, use Thinkorswim to scan pre-market and to see what's moving. Here lately, I've been letting you guys know in the community like what the big movers are. That's because I'm going through Thinkorswim and looking at, you know, the pre-market movers. But normally what I'm looking for whenever I'm, you know, going through my list, and it wasn't 5 things that I look for. I was telling that individual 5 stocks, like 5 to 10 stocks, you can be on your watch list and you can make great money off of that. But normally if I'm not looking for inside candles or maybe some type of 2-2 reversal, whenever I'm trading the strat, I'm looking at indicators and I'm paying attention to levels of things like support and resistance. So for example, are we touching a level? I'll show you, you go here. So for example, if we look at the S&P 500 chart, let me not scare y'all. Let me go over here. All right, so if I'm looking, if I'm looking at the S&P 500 chart, I'm paying attention to, okay, are we getting close to a level? Like here, one thing that I kind of posted was the fact that we're in a channel to the downside. And what we're essentially doing is, yeah, we may have some bullish days, right? But we're going to have bullish days because we hit the bottom of the channel and then we're riding it back to the top. Now we're going to basically do the opposite. We're going to hit the top of the channel, ride it back down to the bottom. But I'm not long on the market basically because this is the S&P 500, an ETF that contains 500 stocks. So with that, I'm not long term on the market until we break out of this channel. So something that I may look for is potentially a crossover on my EMAs. I'm sorry, my MACD. This is the MACD up here. So I'm looking for either a cross to the upside or a cross to the downside. Across to the upside, I'm looking for calls. Across to the downside, I have my eyes peeled for puts. That's one thing. Another thing that I'm looking for is I'm looking to see, are there any areas of support and resistance that we're trading between? It could be horizontal support and resistance. It can be diagonal, like you see here with my channel. So I'm looking for us to either be at the top or the bottom in between, and I'm paying attention to areas of confluence. Like, is it pairing with my MACD? That's something else that I'm looking for. Another thing that I'm looking for when I go through my list is I'm looking for any potential crossovers on my EMAs. If we're crossing, you know, the shorter term is crossing the longer term to the downside, then I'm thinking puts. If we're crossing to the upside, which the green is the 9, The red is the 21. If the shorter term is crossing above, then I'm looking for calls. So that's something I'm looking for. When I go through my watch list every single day, which is something that I do, looking for however many tickers that I want, right? All I'm literally doing is this right here, just literally pushing down, and I'm looking for crossovers. I'm looking for an EMA to cross. I'm looking for a MACD to cross, and I'm keeping it pushing. Coupled with that, like I said, I'm looking for any strat patterns. If I see inside candles, I know that that represents consolidation, that represents sideways movement. That to me means that at some point we're going to have to break out. We can't trade sideways forever. So I'm looking for something like that as well. Okay. Now, as to what Ray was saying, pair these things with sector rotation. Okay. So pair these things with, maybe you want to pull out a sector and you want to look for the same like setups. So it's nothing wrong with going to a particular sector that's leading, looking at those stocks within that sector, making sure that they move with decent volume, decent open interest, that the spreads are good, which please, before you do anything, check the contracts. If it looks good to you, before you put an indicator on your chart, a line on your chart, before you map out anything, save yourself some time, go to your options chain and see what the spreads look like. Okay, look at the expiration date, see if they're monthly, weekly, look at stuff like that so you don't waste your time charting. Go through that sector, see what's moving, see if you have a pattern that you like, and chart it from there. We good?
That was there, I think.
Okay, actually, that was good. That was excellent, but that wasn't what I was asking.
Okay, what were you asking? I'm sorry. You said 5 things that I look for.
No. When you were saying with your 5 to 10 charts, I think you was like the monthly, the yearly, on the charts. When you analyze the charts in your 5 to 10, you look at, I think you said like the monthly, the weekly, the charts and how they move.
Okay, so I think what you're referring to is the charting time frame that you look at when you're trading. So whenever I'm talking about the monthly, the weekly, the daily, I'm looking to swing trade that, because there's no reason for me to look at anything on the month and the week unless I'm just trying to see where the strength of the overall trend is. But if I'm looking at the month, the week, the day, that's because I'm swing trading. If I'm looking at the day or lower, that means that I'm day trading essentially. So I'm sorry, your question was like, it kind of threw me off a little bit.
Oh, no worries. That information was great that you gave, and just to give the visualization of, you know, what you look at and what you do on your charts. That's why I didn't say anything, because I wanted to see I wanted to see that as well. I
Okay.
wanted to see what you were talking about as well. And I have one more question. I know Ray uses TrendSpider. Do you use TrendSpider, Kay?
No, I don't use TrendSpider, but Ray has definitely sold me on using TrendSpider. So I highly recommend it just off of the strength of, Ray's word alone.
Yes, I just actually purchased it on Friday. So after I finish TrendSpider University, then I'll start the Wealth Squad University. It's like I purchased all of this stuff this weekend. So I have to do that first so I can learn how to work it. So Ray, do you like TradingView? I'm sorry, Thinkorswim or TrendSpider better?
Well, Thinkorswim is the broker, so I'm always going to use that. I just like TrendSpider scanners better, as well as I can scan because the strat is built into TrendSpider. And now TrendSpider updated their mobile app to now I could just use their scanner on the mobile app. So if I want to be out and about, I could still figure out it's stuff like inside day or whatever setups I like to look for. So TrendSpider is dope in that. And to me, I think they're going to constantly keep updating and adding functions to them because they're kind of like ahead of the curve as far as like even
Everything.
yes, I don't even use like trend lines and stuff like that, but they have it to where they can automatically draw you trend lines or automatically draw you, you know what I'm saying, hot spots. And I just seen that somebody said TradingView added that. Well, they getting that idea from TrendSpider. So it's
Yeah.
definitely advanced.
Yes, I like it because of the automation on it. And like you said, everything that it does automatically for you. So I just got it. So I'm just really playing with it. I really don't know what I'm doing yet. So I just want to see your thoughts on that.
Okay, yeah, I got you. Plus, I think even though right now I'm using trading view alerts because I still have my trading view chart. So trend spider alerts are a lot better than anything that I've seen as far as between trading view and thinkorswim. Trend spider alerts can you can adjust the sensitivity of the alert, which I think is dope.
Right. Like when the RSI is up or down, when the MACD crosses, when it goes under this, when it goes under that. So I'm excited I haven't quite got that far yet, but I'm just excited to have that all implemented so I can just put it. My goal is to get everything automated. That's my goal. So I can just log on and just trade and do what I need to do. So, all right. Thank you guys. And this is awesome. Thank you so much.
No problem.
All right, I'm about to knock out like 4 questions real quick before we get to the participants that have their hands raised. All right, so does Ray offer one-on-ones? I believe he said that he's going to be offering them sometime soon, again in the near future. I don't know if his mind has changed on that.
It has.
Okay. The links to our courses are listed in provider resources. So anything that a provider has created, whether it's free or on, for a specific fee, go to provider resources. Now, also, when it comes to the time frame continuity, what I'm talking about on my chart, it's right here. Right here. It lets you know the particular time frame continuity. So it basically is showing you, for example, are the day, the week, the month, are they all bullish? Are they all bearish? Are they in conflict? Is the day green and the week's red? That's what that lets you know. If you want that particular indicator, if you want this kind of set we have here with the candles, the continuity, and this letting you know the current pattern, you can come here to indicators in thinkorswim, in TradingView, and it's going to be Strat Assistant by Ricky Z. Carroll. There are other Strat indicators in there that you can use as well. You don't have to use that. The indicator that has the time frames on there, you could just use time frame continuity if you don't even want to put the strat on your chart. That's up to you. All right, so now someone else asked the significance of a spread when you're trading options. Your spread is going to determine your liquidity, number one. That's going to be whether you can get in and out of that trade very easily. So for example, if there's a bid at $20 and there's an ask at $22, that's a $2 spread. You don't have to spend a lot to meet that person halfway. But if there's a spread that's $50 and then where the bid is $50 but the ask is $200, it's going to be a hard time getting out of that contract, number one. And it's also going to be more money that you're going to have to meet that person halfway if you're going to meet them at the mid. So you don't want something like that. You don't want to be stuck in a contract if you decide to sell. How does K get the remaining timer? Okay, I put that on there. And Oreo Transpider, Ray has knocked those out, I believe. And okay, cool. All right, so the people who have their hand raised.
Christian.
I had a question. I tuned into Michael Crow's sector rotation. He did a video on that. If you don't have the FinViz membership, how exactly do you what's the best way to see sector performance? You know what I'm saying?
I think you can actually go to, I know you can view it in thinkorswim, right, Ray?
Not the way he's probably talking about. Crow showed it, because I don't look at it
I
that
thought
way.
that you can access it if it's the free version of FinViz. So you're saying that you can't access it if it's the free version? Because I thought you could.
My bad. I'm sorry. I ain't hear you.
I said that I thought that you hear an echo. Is that just me?
Yeah, that's him. Echo, making you echo. I've muted him for right now.
Okay, so I believe that so someone put in there a sector SPDR. So you can use that particular website that Annie put into the chat. That'll help to show you the sectors and their strength and performance and weightings and things like that, or holdings rather. That link that they put in there.
They
Ray,
also said that you can do it on the free version.
okay, cool. There was one question that was oh,
I'm just letting him see if he got his question answered. Go ahead, Christian.
Oh yeah. So y'all said spdr.com.
I'm gonna type
Sectors
it in there.
SPDR.
You said sectors spdr.
Mm-hmm.
All right.
I typed it in the chat.
All right. And I had another question too.
Go ahead.
Okay. I was gonna ask for Ray. I seen you put Oxy in your watch list, but like with me, I be kind of skeptical. I seen Oxy's been running lately. Do you think it will still run? I'll be skeptical about entering trades that's been running for a while.
All right. So again, it has a lot of catalysts, but two, that's definitely understandable, especially if you don't already have an extra contract to like just let run, but it's running for a reason. Like the reason is because again, it has a buyback program. And then you have Warren Buffett, Berkshire is accumulating shares. Then you have the potential of Russian import oils being banned. So oil is going to keep running regardless. It's just Oxy went extra crazy because of all these different things. Because like I always say, the price action is going to show a lot of times before the news came out. And when it comes to these billionaire, millionaire traders, you don't think they all sit down and conversate like, oh yeah, we buying that up at Berkshire right now. And then Friday, they was like, oh, you buying this? Well, shit, I'm buying it too. You know what I'm saying? So they always going to know. That's why I just look at the price action. That's why I don't, let other things persuade me. If it pulls back, cool. That gives me a better entry to secure another April contract or secure a May contract if I want to go that far out. You know what I mean? So I don't really take that necessarily into consideration. And then it's about to fill this gap between 57.13 and 59.40. So if I scroll all the way over here.
They can't see it because I'm sharing.
Oh, yeah,
And
that's right.
yeah, you can
forgot.
share it. I'm gonna knock out this question when you get done. And you guys, we're gonna bring it to a stop shortly. So
Right here actually has a gap from 57.13 to 59.4. So I don't really let that type of stuff bother me. Because I remember it was one time, I think the stock was like net and it ran like a month straight or something like that. Like this right here, for somebody who probably would have got scared, oh, this just been running up, and then it kept going. So if there's a catalyst, which for me, it's not really necessarily the catalyst that make me look at it, it's just energy is running, like XLE is leading by a long shot. And it just did a 2-1-2 reversal on the year, not on the quarter, not on the year. That's a big reversal because we like 2-1-2 reversals just on the weekly chart, and we see those go crazy. Or on the daily chart, we see those go crazy. So on the year, all right, you know what I mean? So does that answer your question?
You to answer my question. So basically, like on the higher time frames, target like the actionable signals on the higher time frames, and they'll give you a higher percentage.
Yeah, because that's what I've always done. I've always looked at the higher time frames to make sure they're actually directional and what they're looking like.
Okay, makes sense.
Is that all you got, Christian? So we can get the last person.
I mean, how many questions I asked? I got a lot, but I don't want take too much time.
Just DM me the questions. I'll answer them.
Cool.
really quickly before you get to that last person, Ray, I typed in there that I forgot to answer someone else's question, trying to move so fast. So hold on one second. Let me try to share really quickly. All right, so for anybody who has questions about the timeframes, right? So someone was saying, do I always look at a particular time frame when I'm searching to get into a play, when I'm going through my watch list? No, we're not looking at one time frame. First and foremost, you have to figure out how you plan to trade. Are you looking to get into this trade and it's going to be a day trade for you? Because if so, then you need to look at your day trading timeframes. Are you looking to get into this trade because you're going to be swinging it, you're going long term? If so, then you need to be looking at the longer timeframes. So for example, there's no reason, if my true intention is to day trade, there's no reason for me to go and look at the month. That's a lot of noise that I don't need when I'm trading what's happening right now. If I look at the monthly time frame and my intentions are to day trade, well, what if the month is red, but on that particular day it's green, right? They're going to be areas of weakness in run-ups. There's going to be areas of weakness when we're pushing down. You're going to see a red candle even when we're having an uptrend. You're going to see a green candle even when we're in a downtrend. So if you're trying to figure out what time frames you need to look at, you guys, we have a guide in Market Facts and Resources that literally shows you, you know, what time frames you should focus on based upon your intent. If you're intending to day trade, this is going to be your area. If you're swing trading, this is going to be your area. Long-term investing, you know, leap trading, holding for a year or more, or whatever the case may be, this is going to be your guide. So when I'm going through my watch list, scrolling down, I'm scrolling down on whatever time frame is going to be conducive to what I plan on doing with that trade. Hopefully that helped to make some sense. If it did, give me a 5 in the chat. Thank you. I hope I do make a lot of sense. No, I'm just playing. That was Sarah. All right. So, Ray, that's all I got. That's
Okay.
it. I think we got hands. Thank y'all. I'm happy it made sense.
Hold on. Where's that? All right. Terrell, oh, you can ask your question.
Yo, what's up, y'all? What's going on?
Hello.
Very simple question. I know y'all about to wrap up. Okay, you talked about the EMAs. I want to find out. I just purchased a course today, so I'm gonna dive into that later on tonight. So excuse me if I'm asking something that's on the course, but the EMAs, what EMAs do you guys use?
Okay. So first of all, when it comes to your EMAs, I'm gonna just make it very simple. Your exponential moving average is number one, first and foremost. It's going to basically be geared towards how you plan to trade. So if you're doing short-term stuff, you can have shorter term EMAs on your chart, like the 9, the 21, or the 8 and 20. You know what I mean? I've seen people use like the 5 and the 12. It just depends on what you plan to what you're trying to do, right? So for me on my chart right here, I have the 9, the 21, the 50, and the 200 on my chart. Sometimes I may even throw the 100 on there and I'll put it in yellow, but this is what I like to see. For anyone that's struggling with understanding what an EMA is, it's a moving average. No matter if it's going to be on your volume, which I have the moving average on my volume bars, if it's going to be on, you know, my actual price action, it's legitimately a moving average, which all your EMAs do is, if it's a 9-day, it's taking the last 9 days worth of price action and dividing it up and coming up with an average of how it moved over the past 9 days. And it's just going to display it on your chart in the form of a line. This thick green one is my 9-day, okay? Same thing with any other one. Whatever that parameter is, if it's 20 days, 21 days, 100, whatever it is, it's dividing up price action over that time frame and put it in on a line, on your chart in the form of a line. Whenever the shorter crosses below the longer, that's bearish. Whenever the shorter crosses above the longer, that's bullish. You never want to view these things alone. Even though it does cross that way, you also want to see what the price action is doing and what other things are doing on your chart so that they can confirm and have essentially confluence, okay? Hopefully that made sense. So 9, 21, 50, 200 is what I have on this chart. The link to time frame. So this is going to be recorded. So what I would definitely say is just to look here. This is the time frame continuity. It's by Board Writer B. So this, take a note of it. If you like an indicator, when you type it into TradingView, put the star next to it so that it pops up whenever you're looking for your hot list of indicators that you like. It'll make it a favorite for you. Even when you come over here and put the star next to this, it's going to give you this hot tool right here where you don't have to go over there every single time. Okay.
All right. Terrell, did that answer your question? Because I
Yeah, it
kind of
did. It
blacked
did.
out.
Yeah, it did help. Thank you. I appreciate it, Kay. That was
No,
it.
no problem.
Literally last person. All right, and then gotta
Let's
shoot.
play it.
Hi guys, thanks so much for all of the information. I feel like a lot of times I pay close attention to what you guys say on Discord. But the other side of me is like, I feel like there's a lot of information that comes, and then I end up feeling a little bit overwhelmed. And so I don't necessarily make moves. So I guess my question would be, what would you suggest in terms of all of the information that's received, like on a daily basis or on a weekly basis, including the whiteboard? What should we be paying attention to the most?
In the community?
Yeah, like, yes, if that makes sense.
Well, I mean, it makes sense, but I can't tell you what to pay attention to the most. I would say pay attention to when we at you, okay? Because normally when we at you, that means it's something that's important that we want you to know. I'm going to at you with a plethora of information because I want you guys to be proficient in trading. When we put something into market facts and resources, we are only putting it in there because it's something that gets asked a lot and it's important to trading. So that's another thing. Pay attention to those things. Other than that, the only other thing I could say is come to class. You know what I mean? We're going to give you the tools so that you can be successful, but I can't really say like, ignore this, because what if there's something going on in the channel that's not us, that's super important. Someone just linked something in there that was very important that wasn't from us. So I can't really say honestly, just but pay attention when we at you, and that's
Okay, thank you.
no problem. I'm happy that she brought that up, Ray. Someone on my one-on-one session today that I had told me that they are a part of a community and paying $65 a month for that community, and they don't have any resources. And it's a female who has the community, and you pay for her call outs and that's it. And I was like, if any of you have been a part of that, if you're in any type of other community and they're not teaching you, that's because if they taught you what they know, you won't need them anymore. We don't benefit from that at all. You know what I mean? Like, how is helping you to make money and learning something gonna stop me from making my money? You know what I mean? So if they don't want to teach you, if they don't want to guide you, they don't want you to be essentially a fisherman. They want you to ask them for a fish every single time. We don't want that. We want you all to learn, make money. Just give us our just due. Hey, Ray taught me, let them know. Hey, Kay taught me, let them know. That's all we ask for. We're not saying, anything other than that. Okay. Yeah, Crow is amazing. Key is amazing. All of our other providers, fitness chat, it's good, but helping you make money ain't stopping me from making mine.
All right. Ola, literally last question.
You said that already.
Bro, stop raising your hands. I feel compelled.
It's okay. I feel like talking today, so it's cool.
Can you hear me?
Barely.
You're in a bubble.
How about now?
That's better.
I bet it was probably my iPad. I appreciate y'all for allowing me to be the last person.
No problem.
Shout outs to everything you guys do. Appreciate all the information. It's amazing.
Thank you.
Studying the strat, it's been a godsend, changed the whole game for me. So been having a very good week, but predominantly I trade futures, right? So I just took all the price action studying to futures, and that's been amazing. So I just trade ES and MNQ. But now I kind of want to get more involved with options, because based on what we know about full time frame continuity, if we have that trigger on the monthly, we know that it can run hot, so that if the position is good, I could let it run for a longer period of time. I could get much more returns. So really curious in terms of your perspective.
on how to know when it's hot, right? So it's kind of a lot, but I'm gonna just try to consolidate my question. Um, okay, we know that sector rotation is a real thing. So we see that XLE is outperforming everything else right now. So if we go to the sectorspider.com, we could go ahead and look at the top performing allocations of that portfolio and then just try to play those, right? And I think that that's doing well for now, but I'm interested in your perspective on seeing sector rotation overall. Like if we see that, hey, this is kind of exhausted, because we could play shorts when this is going down, but what if we want to know a new becoming market? So I'm just curious to know what's your thoughts, and then like when do you know that it's time to go? Do we look at the quarterly triggers? Or are we looking at monthly triggers to kind of say, hey, let's go ahead for these longer term option plays? Because I used to play weeklies, used to get smacked up, all that stuff. It was bad. Obviously, you know the whole horror stories, but now I'm trying to play this game much more with a cooler head and just let the numbers speak and let the strategy speak overall. So just kind of want your thoughts on that.
For me, as far as what it is, I'm never trying to think about, well, how long can I let this ride? Because you got to take profit when you see it. Anybody's going to tell you take profit as you see it. And then what happens is once you've secured your initial investment plus profit, you let the runners run. If you've done it that way, right? That's why I've been saying, like, if you want to get the March 18th contract and then get the April 14th contract, you could basically end up selling your March 18th and close that, and that ends up paying for your Aprils just to continue to run, right? And then you could just see how you want to do that. Because a lot of times taking a daily reversal and then cutting it off a daily reversal doesn't mean anything because price has to cool off, or it could cool off for a week or two. We never know how long it's gonna cool off or whatnot. So we just got to take profit one as we see it. But if you have a far out expiration and it's basically already been paid for by you, going with the shorter term expiration and then you cutting that, you can continue to let that ride. But if you just hopped in that position, let's say you're up 50% and then it starts to pull back, well, don't just continue to hold, go ahead and take that 50% or give yourself room to be like, all right, well, if it gets to 30%, then I'll close it. So you have to do that based off of one, where you enter, as well as how much are you actually up, not based off of what the stock is doing. Because unless you got in when it initially started running or halfway through the run, then it's always based off your entry. That's why, like, when people are investing, that's why they say your investment entry matters, right? Because it's not about buying Apple, it's about where you bought Apple at or where you bought Amazon at and things of that nature. So if I'm looking at something, a contract that's 3 months out, I'm probably going to be looking at the quarterly, yearly chart, and maybe I'm taking a monthly reversal or a monthly continuation, right? So that's what's going to matter, because you really won't see the sector rotation until closer probably to March 18th. That's a lot of times that's what quad witching is for, the actual rotation of the sectors. All right. But that's why we look at the monthly chart, we look at the quarter, we look at the weekly, because eventually once you get towards the end of that quarter and you're in the last month of the quarter, so March is the last month of this quarter, if they don't want to continue into next quarter, they're going to start dumping off now. They're going to slowly start to drop it now. And then you'll end up seeing that reversal on the monthly pattern, because what it's about is not just being directional, is price enforced. So is this month or this quarter, are we still higher than last quarter, last month's price, right? Because that's what it's about. Are we enforced, right? And enforced is being higher than the last month's high, right? If we're at 2 up, we need to still be above last month's high. All right. If we're at 2 down, we still need to be below last month or last whatever period, is low. So we're not enforced. I'm not going to keep holding that. You see what I'm saying? Until we potentially re-trigger. But the further we get away from the trigger, the more it's starting to set up for a reversal, a 2 up, 2 down reversal, or an inside month going into next month. You see what I'm saying? Are you tracking so far?
At that point, prices starting to exhaust before it hits the magnitude.
Yeah, things of that nature. And the more you actually fully learn the strat, you'll be able to like fully grasp it. You're gonna have to look at the chart and see it for yourself. But as well as like a lot of times in the watch list and chill, I'm explaining these things. That's why it's in video format. That way I can talk all these things out. You see what I'm saying? So the Oxy explanation, I'm walking you through it. Like, so for instance, okay, I'm gonna share my screen real quick.
Fine, go ahead.
All right. So for example, right? I said this in a previous video. I don't think I said in the last video. A lot of things I like to do when it comes to oil is I like to look at the future. So I don't just look at, like, for instance, SPY QQ chart. I look at the future equivalent and see if we're actually directional on day. Oil just gapped up. So it's like Oxy might gap up tomorrow. You see what I'm saying? Like oil just jumped from 114 to 124. If we stay up here and we don't pull back, I don't want to get no big head test. You feel me? So you monitor those things. That's why we get in now. For the people who didn't get in Friday and didn't buy that further out contract, like I said, they're gonna miss this now. Even if we are gonna continue, it's gapping up. People are gonna be weary of getting in once something gapped up because are we gonna feel that gap or not? You see what I'm saying? So whoever was scared to get in because they felt like it had already run, if you just take that trigger and you're up and you swing it and you're up at least 30%, you can feel more comfortable. And now you get a big payoff. Does that continue to make sense, Ola? Because I don't know what your real name is.
Yeah, that's actually my real name. Yeah. Now you crushing it, man. Like I just love everything that you are doing. You just helped that girl. She had a crazy month, so that shout outs to you, that's sensei. Last question, Ray. I see that you have that that indicator right there that shows you how all the sectors are performing.
Mm-hmm. This indicator is sector performance. So it tells you on that day. It doesn't tell you like the monthly or anything like that, just for that day. So that's sector performance by VTrader.
Cool. All right. So yeah, I appreciate it because I've been doing it well. Like I scalp on the ES, and I get like $1,700 days. So that's consistent. I've been doing that for like the past month. So I'm like, all right, I understand this thing on the smaller time frames. So I just want to now have the same confidence that I have on the smaller time frames, taking it for longer term trades. So that's what I meant.
Okay, bet, I got you. Yeah, we're gonna have to wrap up, but anything that I didn't answer here, bro, just DM me. All right.
I appreciate it. Thanks, everybody.
No problem.
Ray, stop the recording. You know how we do.
All right, 1 second.